Hey there, finance fanatics, and welcome back to the show. We've got a juicy earnings report to dissect today, and I, for one, am excited to dive in.
Absolutely. I'm stoked to get into the nitty-gritty details. This company, Maruti Suzuki India Limited, just released their Q3 and 9-month financials for fiscal year 2025. And it's like unwrapping a present.
Right. Well, let's start with the basics. Can you give us a brief overview of what Maruti Suzuki actually does?
Well, think cars, cars, and more cars. They're primarily in the business of manufacturing, purchasing, and selling motor vehicles, components, and spare parts. They also dabble in pre-owned car sales, fleet management, and car financing. Basically, everything automotive related.
Okay, that makes sense. A major player in the Indian auto market then. So let's talk numbers. What are we seeing in their income statement for this quarter compared to last year?
Well, for Q3 FY25, they reported total revenue from operations of about 368,020 million rupees, which is a pretty solid 15.5% jump from the 318,600 million rupees they had in Q3 of the previous fiscal year. I mean, that's some serious growth there.
Wow, a pretty significant increase. And what about the profit numbers? Are they also on the up and up?
Indeed, they are. Their net profit for the quarter is around 35,250 million rupees, which is a 12.6% increase compared to the 31,300 million rupees they reported in the same quarter last year. So, yeah, their profits are definitely cruising along.
Okay, so they're making more money both in sales and profit. How about earnings per share or EPS?
Oh, yeah, the basic and diluted EPS both stand at around 112.12 rupees for this quarter. This is a big jump from the 97.62 that they had in Q3 of last year. This means each share is becoming more valuable with the increase in profits.
That's great. Sounds like a strong quarter all around. Now, let's speak at the balance sheet. Any red flags we should be aware of?
Well, nothing alarming pops out immediately. The detailed balance sheet data isn't available in this report, but from the information we have, it looks like the company is managing its assets and liabilities pretty well. No immediate solvency or liquidity concerns that I can see right now.
Good to hear. And what can you tell me about the company's cash flow? Are they generating enough cash to fund their growth and maybe even make some shareholders happy?
Well, the cash flow statement isn't detailed in these documents either, so we can't get super specific. But given their profitability, it's fair to assume that they're generating enough cash to keep their operations running smoothly and to fund future growth. Although, without saying it, that's just an assumption.
Okay, that's fair. We are working with limited data. Let's switch gears to financial ratios then. What key ratios are standing out here?
So their operating EBIT, which is a measure of their operating profit, is hovering around 10% of net sales, which is a slight uptick compared to the 9.9% from Q3 of last year. This shows that their core business is becoming more efficient.
I see. So their operations are becoming more profitable over time. Any other noteworthy ratios to mention?
Well, their profit before tax or PBT is around 12.5% of net sales, a slight decrease compared to the 12.7% of last year. Also, their profit after tax or PAT is about 9.6% of net sales, which also shows a slight decrease from last year's 9.8%.
Right. So the overall margins are slightly down, even though the absolute numbers are up. Interesting. What about material costs? Are they also a major component to these figures?
Absolutely. The material cost is around 74.7% of net sales for this quarter, slightly higher than the 74% they saw in the same period of last year. It does look like fluctuations in material costs might be a factor to watch, I guess.
Yeah, that makes sense given the current environment. How do these quarterly results compare to the previous quarter?
Well, their sales volumes increased by 4.6% this quarter, which resulted in a 3.4% increase in net sales. Interestingly, their operating EBIT remained flat, but their profit before tax decreased by 9.8% from the previous quarter. It's like they're selling more, but not as profitably per unit.
That's a bit of a mixed bag, isn't it? So even though sales are up, the profitability per sale is down. What do you think is driving these fluctuations?
Well, the presentation notes that higher sales promotion and advertisement expenses, adverse foreign exchange variations, and lower non-operating income are the main culprits. They are spending more to drive sales, which is impacting their overall profitability slightly.
Okay, that makes sense. So marketing and exchange rates seem to be key drivers here. Now, what about the 9-month figures? How do those look?
Well, their 9-month performance is pretty stellar. Their sales volume is up by 5%, their net sales are up 8.2%, and their operating EBIT is up by a whopping 19.2% compared to the same period last year. So, they are really gaining some serious traction.
That does sound promising. It's great to see that strong growth over a longer period. And their net profit?
Their net profit for the 9-month period is up by 9.8% compared to the same period last year. So overall, their performance for the first 9 months of this financial year is quite impressive.
Okay, so a strong 9 months overall, despite some fluctuations in individual quarters. Now, let's talk about sales volumes by segment. Any interesting trends there?
Well, domestic sales actually grew by a moderate 2.6% compared to last year in the 9-month period, while exports grew by a massive 21.1%. So it looks like the company is really expanding their international reach.
Interesting. It seems like they're focusing heavily on exports. What about domestic sales by segment? Any standouts?
Well, sales in the mini and compact segments have declined, while UVs, which are utility vehicles, have shown a growth of almost 15%. The market's tastes seem to be evolving.
That's a good point. Customers' preferences are definitely shifting. Now, let's talk about some other interesting stuff in the report, like the scheme of amalgamation. What's going on there?
Oh, yes, this is interesting. They've approved a scheme to merge their wholly owned subsidiary, Suzuki Motor Gujarat Private Limited, with Maruti Suzuki itself. It's like two puzzle pieces joining together.
So, what is the rationale behind that merger? What's the big picture here?
Well, they want to consolidate the businesses, improve operational efficiency, and enhance business synergies. It's like streamlining their operations to cut costs and become more agile. It can definitely be beneficial for them in the long run.
That makes a lot of sense. Efficiency is key. Any other exciting news from their board meeting?
Absolutely. They've also approved the reappointment of Mr. Hisashi Takeuchi as Managing Director and CEO for another 3 years, and Mr. Moheshwar Sahu as an independent director for 5 years. So there's some stability at the top management.
Ah, that's reassuring for investors. Okay, so before we wrap up, any thoughts about the outlook for this company?
Well, considering their growth trajectory and expansion in the export market, I would say the future looks quite promising. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. But keep an eye on those material costs and forex fluctuations. Those could be potential challenges going forward.
Great point. Those fluctuations definitely need to be monitored. So, what would you say are the key takeaways for our listeners today?
Well, Maruti Suzuki had a solid quarter with impressive sales growth and profitability. They also appear to have a good plan to expand their business with the amalgamation and with the focus on exports. So they're definitely a company to watch. But like we always say, past performance doesn't guarantee future success. So keep a close eye on the financials.
Absolutely. And speaking of watching, make sure you like, share, and subscribe to our YouTube channel for more exciting analysis like this. It's been great delving into this report with you.
Totally agree. This was a great deep dive into their financial results. I guess the numbers are always telling an important story.